Hi everyone, thanks for joining us. I'm Jason Ferris and this is Jason Eliason, our Chief Investment Officer. Now that the second quarter has ended, I wanted to discuss a few key events that's happened over the last quarter. Jason, thinking back on the second quarter, what stood out the most to you?
Well, for the most part, I'd say the markets were generally positive for the quarter, which was a really nice rebound from the first quarter. Real estate stocks and small cap stocks really did well. Everything else was fairly flat to slightly up. Foreign stocks would be the exception. They were quite the laggard. The day-to-day, though, was very different. It was very hectic. The macroeconomic headlines, mainly related to geopolitical concerns and trade policy, were really the true story. These issues fueled the gyrations, these ups and downs that were present during the quarter, and made it very frustrating. And these geopolitical issues and trade wars will continue to dominate the landscape over the next couple of quarters.
So should we be concerned over the growing trade tensions with China?
Not really. I mean, I am concerned about the trade tensions, but not specifically to China. I'll point out that we are generally not proponents of restricting trade whatsoever and limiting free market movements of capital and labor, but China's a unique situation. First, they're the second largest economy in the world, which is significant. The issue with China, though, is that they have and they continue to use very unfair trade practices and, quite frankly, outright theft as a means to advance their economy. And targeting these practices would be very, very prudent. Secondly, we buy considerably more from China than they buy from us, so we have some leverage in that, and that's a lot of what the administration is talking about. I will point out, though, the way the administration is going about it is going to be problematic because there are certain procedures that have to be followed with the WTO, the World Trade Organization, and they're not following those procedures. I also want to point out something that's concerning is that I'm relatively disappointed in how they're interacting with our longtime allies, putting some barriers of trade in place under the pretense of national security. I believe these tariffs are just a poorly thought out ploy to leverage a more favorable trade arrangement. And really, at the end of the day, the U.S. consumer is just going to end up paying more.
Along those lines of possibly paying more, the Fed raised interest rates again for the 7th time since 2015. What should we take from this? How concerned should we be?
Oh, we should be concerned. The Fed actions have been well telegraphed and are expected, especially considering the general strength of the economy. Inflation's still under control, and we have a really strong labor market right now. And I'd also point out that generally these rates are still considerably historically low. Looking forward, I have some concerns, and I would call them growing concerns, about whether the tariffs that are good, whether these tariffs, this trade policy, these trade wars are going to push inflation higher, causing the Fed to maybe act more quickly than they otherwise would want to.
So looking ahead, what should individuals focus on going forward?
I'd say it's probably more impactful to talk about what not to focus on. Don't focus on the sensationalized headlines. There's going to be more and more of these. Try to ignore them. Most times it's truly better to tune out this day-to-day noise and remember that we have a disciplined process. With that being said, there are trends that I would expect to continue, such as the day-to-day volatility that's been present in really Q1 and Q2. And additionally, I think these geopolitical issues are probably going to get a little worse before they get better. No one can say with any degree of certainty what's going to happen in the day-to-day market movements. What we do is we try to focus on what it is we can control. We can control how portfolios are allocated, and we can control how we create cash to meet your needs. What you should focus on is really, going forward, what you should focus on is making sure your asset allocation matches up with your financial plan, as well as your willingness and ability to take on risk.
Jason, thank you so much for the insight. I appreciate it. Thank you again for joining us. I hope you found some of the information very helpful. Jason also wrote a full report if you'd like to see some more data, which is on our website at waller.com/blog.